Hello and welcome to the Bulletin with UBS on Monocle Radio. Each week the sharpest minds and freshest thinkers in finance take you beyond the numbers and hype, right to the heart of the big issues of the day. This week we're talking about scapegoat economics. Scapegoat economics creates stories that incorrectly blame a group for everything that's going wrong. Prejudice politics promises to reduce that group's influence. Because scapegoats are not the problem, new ones continually need to be found when prejudice fails to solve the underlying problems. So, what happens next? And with US President Donald Trump busily continuing to make scapegoats for new and old problems, what does this process mean in economic terms? Well, here to answer that question, we once again welcome UBS Global Wealth Management Chief Economist Paul Donovan. Let's sort of revisit this theme of scapegoat economics. And I think we know, because of what's happening in the US, why we're looking at it. And you've spoken so eloquently to us before about, the price of prejudice in its many different forms. And this is kind of one example of it, isn't it?
It is. So what you get with scapegoat economics is when people are scared, when people are worried about the future and the pace of rapid change, they always want somebody to blame. Everything's going wrong because of that group over there, the scapegoat economics. It's never the fault of that group, but it's a very convenient, simple story to sell. And one of the things that we see time and time again is that foreigners make amongst the best scapegoats ever, because foreigners aren't like us. And so therefore it must be their fault that everything in my life is going wrong, or I'm so worried about the future, or whatever. And that can be foreigners in the sense of foreign nations with whom you are trading. And it can also be foreigners, of course, in the form of immigrants into your country. So both classes are normally scapegoated. And that then does lead to the specific form of prejudice politics that we are now starting to see, which is economic nationalism, where politicians will try and put in place barriers to restrict the economic influence of foreigners in either category in order to sort of say, look, yes, it is all those scapegoats, and here I'm doing something about it.
And Paul, you've literally written the book, of course, before on the price of prejudice. Can you just tell me a little bit in economic terms? It's easy to see why this sort of economic nationalism and this sort of polarizing political direction can have what would you call it, sort of a carcinogenic impact on the discourse. But can you tell us what the economic cost is and why it follows that this kind of pattern of behavior makes things worse?
Well, that's pretty simple, because economic nationalism, any form of prejudice, is irrational and it is inefficient, because what it's saying here is we don't want the best. We don't want the best person for the job because they speak with a funny accent. We don't want the best quality goods going into our industry because those goods happen to come from overseas. And so what you find is you end up with second best. And second best is not great, generally speaking. It's an example of what economists would call, with a clinical precision, market failure. Because what you are doing here is you're not sitting down and rationally saying, yes, this is exactly the right person for the job. You're saying this is exactly the right person for the job, and for some completely nonsensical reason, I'm going to reject them. And that then leads to less efficiency in the workforce and in production and in the economy at large.
Well, you mentioned the markets there, Paul. Let me ask you about the idea that the way markets, I don't know if they generally assume this, or certainly just with Trump through watching his prior conduct, they tend to assume policy retreat, potentially in increments. Talk to me about that. Is that a right assumption? Is it a wrong assumption? Is it an assumption?
So I think certainly financial markets have been assuming that President Trump will retreat from his more extreme tariff proposals. I mean, certainly that's been their strategy so far. I think almost every major tariff proposal we have then had a retreat. I'm struggling to think of one which has actually stuck. And so I think so far that has proved to be a very reliable idea, that President Trump is being very dramatic in the initial announcements because that wins them political kudos. I am standing up to this group and this group is to blame for everything that's going wrong. And then the retreat subsequently is just sort of recognizing the economic damage that the scapegoat economics would do if it continued to be pursued. So it's a sort of a logical pattern. Now, there is a risk here, though, and I think there are two specific risks that we need to be aware of. The first of these is that someone told President Trump about the fact that the markets continually expect him to retreat. And he got quite upset by that. And so now maybe he will introduce an element of defiance to prove that he doesn't retreat, even though the markets are assuming that he will retreat. Because of that, he then doesn't. So that's a potential risk that he may need to feel a defiance towards the financial markets. The second thing is something which is perhaps causing a little bit more longer term concern. So the thing about scapegoat economics is you always need to have a scapegoat, because when something else goes wrong, you've got to have somebody to blame. And if, for example, you said, right, well, it's all the fault of foreigners trading unfairly, so we've put tariffs on China, and then something else goes wrong, you need to find somebody else to become the scapegoat, because you've, in inverted commas, dealt with the China issue by putting tariffs on them. So why are things still going wrong? Well, it must be because Europe isn't playing fair, or, the herd and McDonald Islands are not paying fair, or whatever it is. You need to have a continual scapegoat to put before the eyes of popular opinion. And so the risk here is as well that once you start down the route of scapegoat economics, you keep searching for another scapegoat and putting in place other obstacles, other inefficiencies into the economy.
Well, at the risk then of asking you a question that's, I guess, more about the cyclical nature of politics than economics, Paul, how long can this cycle continue for? Do you think Trump can continue to do it? I mean, as you alluded to already, he'll sort of run out potentially of scapegoat groups. But do you think that in terms of the broad brush direction of policy, this is something that has legs? Is it a tale we'll have to just see through, I don't know, the whole of Trump 2.0?
Well, I think certainly it's likely to continue for some time. And I think there will be some certain fluctuations. So what we have seen, I think, in terms of the scapegoat economics in the United States, foreigners have borne the brunt of this, but that is immigrants as well as foreign countries, and it sort of oscillates between the two. So you've had the actions of the ICE police force with the deportations and the arrests and so on and so forth, and so you oscillate between those two to a certain extent. You've also had what is sometimes referred to as the deep state, so the Doge government cuts. It's all the fault of inefficiency and waste and bureaucracy in the Washington swamp is the narrative. Whether one believes that or not is largely a matter of political viewpoint, I think. But that was also a scapegoat as well that has come through. We've seen the LGBTQ plus community also be targeted in a number of states, and it's all their fault that things aren't going well. So there are other scapegoats in other areas. It doesn't always have to be trade policy. Foreigners encompasses a broader group than that, and there are alternative scapegoats that may well be utilized. But I think this is something that will recur. The question is, as the courts start to weigh in on the legality of some of the trade issues, will President Trump be able to resurrect the trade taxes that he's imposing on US consumers in the event that we see the courts ruling against certain parts of the trade protection? In some areas, the legality is on firmer ground than in others, but there could well be some pushback from the courts as we go over the summer.
Now, Paul, I did want to just one example that you were talking about earlier this week was on copper and this 50% tax on copper and the impact that can have and how ultimately, it makes the US less competitive, which you've already spoken to. But just quickly illustrate that copper example, because it's an instructive one as it shows the sort of slightly, I don't know, the sort of maybe the miscalculation that Trump's making.
Well, the copper one is complicated. So the position of President Trump is that copper is an issue of national security. We need to be more self-sufficient in copper. At the moment, the United States imports about 50% of the copper it consumes. Now, that's a little bit misleading because it does export some copper ore as well. So taken together, if they didn't export, they would be importing 1/3 of the copper they use. But it's a very large chunk of the market. And when I'm talking about copper, I'm not just talking about the ore that you dig out of the ground. We're also talking about copper pipes and copper sheeting and so on and so forth. So metals primarily fabricated from copper is how it would be referred to. Now, what is going on here is Trump is saying, well, we want to become self-sufficient, so we're going to put in place a very aggressive tax, a 50% tax on imported copper in all of its forms. The problem with doing that, of course, is that you can't dig a copper mine overnight. You can't build a copper smelter overnight. And so the United States does not have the capacity to replace this imported copper for several years to come. And what that means is that, very simplistically, US copper users will be paying 25% more for the copper that they are buying than will the rest of the world, on the assumption that half is domestically produced and half is subject to tariff. They will be paying about 50% more for the copper that they're using. Now, if you are in an industry that is dependent upon copper inputs and then you're trying to export to the rest of the world, obviously your costs have just gone up relative to Europe. Copper prices in Europe are not going up because of what Trump is doing. Copper prices on the Chicago exchange are going up because of what Trump is doing. And so that then means that what you are doing is very obviously imposing a cost burden on US manufacturers, which is going to be a hindrance to them in selling competitively into global markets.
Paul, let's just throw things forward then. What do we need to look out for if we're trying to make sense of this, if we're looking, maybe somewhat idealistically, for some sort of progress in the right direction? Are there key next announcements, other data points coming up that you and your fellow economists will be looking out for some nudge in terms of predicting the direction of travel?
So over the course of the next couple of weeks, we will undoubtedly get more announcements, probably over social media, about what the penalty tariffs will be against other economies. And the areas of focus here are going to be, in particular, the European Union, Canada, and Mexico, and to a lesser extent, China. Those are the areas which are obviously of most concern in terms of the disruption. And then as we approach the 1st of August, which is when these new trade taxes are supposed to be imposed, there is going to be a focus about, does Trump retreat before the 1st of August, or is this something which is going to come subsequently? And that, I think, will depend on the reaction of financial markets, and it will depend on the lobbying of US companies that are clearly, not happy with the fact that their costs are going up so much. So those are the two immediate things. And then after that, over the course of August, September, what we are going to be very much focused on is the import prices going into the United States. Now, remember, import prices are the price before the tariff is applied. So if the import price just carries on the trends of the last couple of years, that is telling you that all of the tariff is being paid for by American companies and American consumers. If you were to see some reduction in the import prices, that would suggest that foreign companies were squeezing their margins in order not to pass on so much of the tariff to the end user. So the exporter would be taking a smaller profit margin that would lower the import price, and that would then offset some of the tariff increase. I don't think we're going to see very much of that. I think this is going to be largely, almost entirely paid for by the consumer in the United States, but the import price data that we get covering the months of August and September is going to be something of a focus as well.
That is Paul Donovan, bringing us to the end of this edition of the show here on Monocle Radio. Head to monocle.com for more, and to discover how UBS can help you, go to ubs.com. This is The Bulletin with UBS on Monocle Radio. I'm Tom Edwards. Thanks for listening.